So you might have gathered by looking at the image on the right there that we have something to do with trading. We are in fact a trading platform, a Web3 trading platform that allows users to trade hundreds of different global markets. Here's the big problem in the industry today. Currently, you can't trade global markets, so you can only trade crypto on Web3 trading platforms like DYDX. On DXS, you have the option to trade Forex, commodities, stocks, indices, as well as crypto. So this is a big problem, and it's true of the industry in general. It's not just true for DYDX. Well, I'm using DYDX as an example in this presentation because there's something like 70% market share, but it's also true for the likes of GMX, Perpetual Protocol, and so on. Okay, so on this slide, I'm doing a little bit of a product comparison between DXS and DYDX and these sort of Web3 trading platforms. And as you can see, looking at the table, there's kind of more similarities than differences between the two. For a start, you know, we're both platforms are utilizing this new form of Web3 login flow using like MetaMask or Trust Wallet, which greatly simplifies the user onboarding funnel. Both platforms are non-custodial in the sense that either platform are not holding any user account funds. So the user, when they're opening trades, they're doing so directly from their wallet. You can't have an FTX style situation happen with these trading platforms. Both are allowing you to trade price moves both up and down with leverage. And both are implementing this whole idea of settlement as a protocol. So what that means is basically you're implementing business logic on a blockchain using smart contracts. So not only is this like codified in the open, it's super transparent, but it's also more efficient and automated to do something like this. I think I will be skipping over these slides that give you a little bit of a look at what the UI looks like and a user opening a gold trade, because we've got a video at the end of the presentation that does something similar. So I'll just jump over these. I put this slide in to kind of give you an idea of where we're at, and that DXS is a real company. It's been around for a while, and it's got some real traction out there in the market. So DXS has been operating for about 3 years now. And in that time, users on DXS have opened 1.1 million trades across 200 different markets with about 4.3 billion in total trade volume. So we're still relatively small in the scheme of things when it comes to Web3 trading platforms, but we're definitely pointed in the right direction. It's taken us 3 years to get to this point where the feature set is full enough and we have a direct connection to Ethereum and access to a liquid market of both capital and users. So over this time period, it's kind of been really important just to build out, but working with this active audience that is actually generating us revenue. But the question now kind of becomes how much energy, how much money can we put towards customer acquisition going forward, because this is now our main goal moving forward. So on this table on the right, you won't usually see this from trading companies, this level of transparency. But yep, I'm more than happy to share like our full numbers. We've got something like 1,000 customers over the last 3 years. And on average, they're opening about 34 trades a month. And that's generating for us average revenue per month per user of about $22, which means our customer lifetime value is pretty high. You might think $750 customer lifetime value is pretty good. When you compare this to our competitors in the Web3 trading space, this is still very small. I think DYDX has something like $4,000 customer lifetime value per customer. Right, and the key reason for that is that we've been very cautious in the last 3 years to keep market limits relatively low to kind of hedge against risks of unknown bugs and exploits and things. So as we lift these limits going forward, we should see this customer lifetime value also sort of rise as well. And if you've got a substantial customer lifetime value like this, it also means that you've got a fair bit of inertia when it comes to the capacity to spend on onboarding new users. So we're just starting to think about this now. These next couple of slides are basically just summarizing what I've just said. So we've got the application all set up. We've got the protocol up and running. We've got access to hundreds of different markets, 0 transaction fees, a direct connection to Ethereum, and now we're just thinking about growth. So what we're doing from a growth angle is basically just giving users free money. So that's the concept called out there quite small as of a bounty balance. So people on the trading platform can use this bounty balance to open trades on the platform. So we'll offer people challenges. Like these are very small amounts for testing at the moment, but you can imagine this sort of snowballing when we bake in referral schemes and ways for people to make $100 or $200 just referring their friends to the platform. The key differences between DYDX and DXS are the fact that you can trade global markets on DXS, but you can't on a platform like DYDX. And this is because they're unwilling to basically compromise on not decentralizing their price feeds, whereas DXS is. And the reason for that, basically the only real reason when it comes down to it that you would want to keep your price feeds decentralized is to keep your entire platform, in the case of DYDX, decentralized so you don't have to comply with regulations. At DXS, we don't really care about decentralizing price feeds. We're more than willing to subscribe to a centralized provider and import these feeds in a centralized manner because we're more than happy to be regulated, and we have a mechanism discussed here that every time that you're opening a trade on DXS, the trade parameters are logged on an immutable layer 1 blockchain, so there cannot really be any disputes about did we manipulate market prices or did we manipulate trade parameters or something to boot you out of a trade, because all the information when you open the trade is just evident on the blockchain. So this is a GIF of a user opening a $300 long position, I think, on the gold market using 30x leverage. So that means that they had a $10 margin payment coming out of their account directly from their Web3 wallet. And this screen is showing this user looking at their receipt on an independent third-party blockchain where they can see all of their trade parameters.
Any questions for Angus?
Does this vehicle give investors any kind of protections like a normal brokerage firm would have FINRA and insured accounts and things of that sort?
Yeah, I could hear you, but he's asking basically, do we have any investor protections for people trading through our brokerage? We copy and pasted the model used by other centralized players in the game, like SimpleFX, PrimeXPT, and Quant Fury, who register a brokerage in St. Vincent and Grenadines, so that's what we've done. We've also got a non-profit foundation for all the liquidity pools, excess losses that go into the liquidity pool and things. We have to comply with AML and KYC regulations and stuff and do sanction screening and things. If we want to move into other markets in the future, like soliciting customers in Europe, for example, we'll need to get licensing. The comparison to DYDX was basically saying these guys are trying to avoid that by being fully decentralized.
And when you're trading those vehicles like gold and other commodities, are you using futures or are you using spot or American vehicles like GLD, things like that?
Yeah, we're using a contract for difference, CFD. So you can't, as a retail trader here in the US, can't trade CFDs, so we block all US IPs. The likes of DYDX, they're using a perpetual future contract, but we think that the CFD is more flexible because ultimately you're trading against a liquidity pool. So we don't have to maintain an order book or anything like that.
So can Americans trade most of the products that you're offering?
They can't trade any. It's all CFDs. Yeah. Perhaps in the future we would consider options markets and perpetual futures as well. But there are downsides. Like we have significant upsides being able to basically have zero slippage when users are trading against a liquidity pool, which our users really like. And you also have certainty over the funding rate. When it comes to perpetual futures, you never know how much you're going to pay in fees. So there's quite a few downsides.
Yes, I have a question about the traditional instruments like gold or let's say U.S. markets. Are they just operating for the price feeds like the traditional financial hours like Monday through Friday? And if not, would you guys consider doing like 24/7 trading on like commodities and other instruments?
No, we just trade regular market hours. Okay. So stocks, whatever the New York Stock Exchange hours are, same for indices and any commodities where that's relevant. So, because we're porting in real life price feeds from outside parties, right? And we don't want to be doing any secondary market after hours.
And these are all using like CFDs, like pricing, like the market data from CFDs?
Well, it's using real world asset pricing, and it's allowing users to bet on the price movement of this real world asset using the CFD.
Yes, the reason I'm saying is because sometimes when you trade CFDs, the price feed is different for, let's say, gold is pulling it from a one spot price, and the CFD market can sometimes be, the volume is not so liquid where other different brokerages are offering different CFDs at different prices. So, and that's where the Oracle problem comes in, right? What do you guys...
Yeah, so we're not worried about doing any decentralization of price feeds like you see with DYDX and the equivalents. So we're literally just porting in the mid rate for all of these assets. We're deriving a synthetic spread based on past volatility, and we're just displaying that bid and ask price to our user base. Yeah. So I mean, it doesn't matter how liquid our platform is, right? We've always got the price feed. It's not an order book we're maintaining.
We got time for one more question here for Angus.
How to start trading with free money in 60 seconds. Go to DXS.app to get started. Click Login and sign in with your favorite Web3 wallet. Once you've authorized all the wallet prompts, choose your favorite US dollar stablecoin and connect your wallet to DXS. You're in. Have some free money to celebrate. Why not open a trade? DXS traders can choose from hundreds of different markets across crypto, commodities, stocks, indices, and Forex. Let's go with Amazon. The chart looks bullish. Let's buy $1 of Amazon using 10x leverage. That's a margin payment of 10 cents. Boom, your trade's open. You also just received another $1 for free. Keep trading to unlock even more free money rewards at DXS.app.
I'm glad that ended up working. Just, you ever got 1 minute?
Yeah.
Yeah. I just wanted to say that, so this is the flow that we've got currently, and I know that the amounts are quite small, 10 cents, $1, $2, but we're going to start ramping up these rewards. And that's why I spend so much time talking through our customer lifetime value, because we actually have quite a lot of capacity to start giving people a ton of rewards to join the platform.